Hey everyone, thank you for watching my video today. My name is Clifton Saunders, and today we're going to be discussing how your credit score works and understanding a credit report. Alright, first we're going to talk about your credit score. The way that it is calculated is based on like many different factors. A lot of times people think it's just, hey, I have an account and I pay it on time, I'm going to have a perfect credit score. However, when you first get a credit report or get a credit score is when you first open your first account. Well, that first account may be paid on time, but you will still generally start off with a lower credit score because there's many things that encompasses a full credit scoring model. Like, for instance, how many accounts that you have, what type of accounts they are, whether they're revolving or installment debts, how long you've had that account, down to do I pay my minimum payment or do I pay it off in full every month? And of course, my history is generally spread up over the 7 years of the history. So every one of those things go into effect in calculating a credit score model. So I'll kind of break them all down right now for you, and we'll go from there. Average age of accounts. What that is that's where a lot of confusion comes in. Most people are wondering why, hey Cliff, I've got a great credit score, I've never been late on anything, and I paid all my bills on time for a year, but I just opened up a brand new account and my credit score dropped. And the reason for that is because in most cases, not only did you get hit with an inquiry, your average age dropped, because say if I've had 2 accounts that I paid on time for the last 3 years. So I have a 36 average age of account. And then I go open up a brand new one. Well, what that does is when they average the average age between all 3 accounts, my average age drops to 24 months. And of course, generally good credit, normally you're going to have an average age of 4 to 5 years on your credit profile, and that's how you increase your average age of accounts to make your scores look a lot better. So that's why they say when you've got accounts that you've had for years, like credit cards, that's why you never want to close them, because that average age of accounts will help you in the long term of your credit score profile. Next one is, of course, payment history. Payment history is very important. You should always pay all your debts on time. I always say credit is king, and if it reports to your credit bureau, it gets paid before anything else. And I'll tell you a little quick story. I won't keep it too long, but I always ask this question: have you ever been bit by an elephant? And most of you are going to say no, and I'm going to ask you, have you ever been bit by a mosquito? And of course, all of us have been. And it's because in life, just like in credit, it's the little things that hurt. And so where this scenario comes in is where people will pay on time all their bills on time, and then they go late on a $20 payment, and all of a sudden your credit score will drop 100 points. And they're like, Cliff, why did my score change so much? It was only $20. Well, you got to think about it like a creditor would, or a credit bureau in that matter, is that if you can't pay $20 a month on time, even though it was small, imagine this: it's either 2 reasons why you couldn't pay it. Is either you didn't care, or you're really hard off that you can't pay $20. So keep in mind, just because a debt is small, going late on it can be just as detrimental to your credit as going late on a big account. All right, now that you've been paying your debts on time, are you just making your minimum payments, or are you paying more than your minimum payments? Credit bureaus now are looking at trended data. What that means is they are evaluating your credit report to see if, hey, every month when your credit card comes due, do you just pay the bare minimum, or are you paying more on it, or are you paying it off? The more you pay over your minimum amount each month will always help your credit score look better. So you may not want to pay, you may not be able to pay it off every month, but always paying a little extra on it will definitely help your credit score in the long run. All right, and the last myth we're going to talk about is that I have to have 100 accounts out there to build credit. And that's actually false. In most cases, in order to have a good, healthy credit score, generally you want 2 to 3 revolving accounts, and you want 2 to 3 installment accounts tops, because the more credit you have, it usually reduces your average age of accounts. You got more accounts you got to pay, and then you're making your minimum payments. So you want to keep your accounts limited to a few things, and that's why it's good to always get major credit cards that you can use anywhere, like an American Express, Visa, MasterCard, something that you can use at all stores. So that way you can increase your limits over time, because the higher the limit you have on your credit cards, the better off your credit score is. So you don't want to have 20 cards with a $1,000 limit on each one. I'd rather see you got 2 cards with $10,000 on each one. It will be way better in the long run for your credit score. Also, whenever you're applying for credit, inquiries do hurt your credit, unlike when you're shopping for a mortgage. Because when you apply for credit, every inquiry will drop your credit score. But when it comes to a mortgage loan, you are allowed to shop around and actually get multiple inquiries, and they all count as one over the time frame of shopping for a mortgage, because they know you're not going to be able to go out there and buy 3 or 4 houses at one time. But if you apply for 3 or 4 credit cards or apply for 2 or 3 car notes, you can get those all at one time. So you want to make sure you limit the amount of accounts you have, and you also want to limit the amount of inquiries you have, because those will have a bearing on your credit score in the long run. All right, all. I hope y'all learned something about the credit scoring and this credit scoring model. Like I said, me and my team are always here for you. If you have any questions or if there's anything that wasn't answered in the video that you would like to know yourself, give me and my team a call back. You can reply to this email. You can give my team a call at 281-930-7775. Again, this is Clifton Saunders. We're at Rapid Pro Mortgage, and we're looking forward to helping you and your family get into your next home.